Hello everybody, Brian here from quantlabs.net for January 30th, Tuesday, doing another market analysis. I haven't done one in a while, just been working on this strategy for Forex. Anyways, let's get into it. First thing, investors are betting big on bank stock. Now, this is an article from scmp.com, South China Morning Post. I don't know if this is a mouthpiece for the Chinese government. One thing I will say is this article to be trusted about how they feel that the banks out of China are stronger with better fundamentals. I may question that, but I will say when it comes to the stock markets in China, they're being led by the Chinese banks. That's why I've highlighted this article. But this is to counteract that. Okay, next up is the Euro area. It's on a boom right now. The markets are up. The GDP increasing with their projections. This could probably be the only growth area as it looks from what I'm seeing. Consumer pricing for inflation near the goal, not quite at 2%. There's an article from Bloomberg you can get called Euro Area Economic Boom to roll on after strong start to 2018. The other article I mentioned on the South China Morning Post at scmp.com, the title of the article is Investors Bet Chinese Bank Stocks Have Further to Go as Economy Improves, Bad Loans Fail. All right, last article. Currency kerfuffle. The big news right now is that the US dollar has been falling pretty hard. As a result, the US Treasury has been rising. This will not be mentioned in this article here, but I'll put the article out here called from fxstreet.com. Basically, it's called Currency Kerfuffle. So basically what's been going on is the US dollar has been falling, and you can see here the different exchanges or currency pairs: Euro, US dollar, British pound, US dollar, trade weighted dollar, and they've all been declining. The equity bond funds with the world, all of it, a lot of it, most recently since mid-December, has been going into the world. Well, lots are losing faith in the U.S. bond market, and there's more outflow than inflow. The big thing is it just had a big bond auction. Fewer are buying, Japan's not buying, and there's rumors that China's not buying. I believe China's not buying. As a result, the Treasury yield has gone up. It's been just broke through 2.7%, and it's projected by strategists that if the Treasury yield does hit 3, all hell will break loose. And with this tax cut, this may not be a good point for Trump to do, because if the U.S. dollar does continue, and they're depending upon more exports for the U.S. market, it don't matter. The world market may not import American product because of the stance of Trump. And he's also somewhat started a trade war with China. Well, I shouldn't say that. They have been in a trade war for probably decades with the deficits of the trade balance against Asian countries, and pretty well a lot of countries like Mexico, Japan, Korea, namely, which Trump has been highlighting, and he's trying to correct that. So because of the unfair balance in the trade with each of these countries, that technically is a trade war, but only Obama seems to want to do anything about, Trump wants to do anything about it. As a result, his latest speech in Davos, very few claps, lots of big quiet audience. Tonight is the State of the Union. We'll see how that goes. But as you can see here in this chart at the fxstreet.com article, we can see that trade deficit is falling. But the weighted dollar is up, as well as import prices have gone up as well. And that's what's projected coming throughout July of this year. Some of the other charts to take highlights on. EM trade, emerging market, volume here in blue, slightly up, but what's falling is the exports and the US dollar, so on and so forth. Anyways, the rising protectionism for sure, and I'm not sure where it's going to play out, but I think it needs to be done to fix all these imbalances in the world markets and trading. Anyways, that's about it. Hopefully I'll get to another one real soon. Lots of notes about cryptocurrency and Bitcoin, and just too much to even talk about that. Over and out. Later. Have a good day. See ya.